Welcome back, folks. We had the Dow finished down 27, Nasdaq off 3.5, S&P's off 2, and we have our man, Mr. Chris Gaffney. Chris, folks, is the president of Everbank World Markets. Now, as you come over to our website at TFNN, you're going to see the banner on the side. You can hit that banner, and what you're going to bring up is this. You'll bring up the Everbank banner. You're going to hit investing, and when you hit investing, folks, you can hit the market safe CDs. Everbank has just launched the 5-year market safe power metal CD. What this CD does is this. It's combining the power of gold, silver, and copper into the market safe CD. The funding aspect is July 9th. You have till July 9th. It's only a $1,500 minimum to open. Your principal is protected 100%. You have a 45% capped upside payment to the maturity, to the CD maturity. It's FDIC insured. It's IRA eligible. Our man, Chris Gaffney, welcome back to TFNN.
Well, thanks. Great job on that description. You should come over and work our phones for us.
I'll tell you, I mean, I love these products. And Chris, we have our man, Mr. Andy Heck, with us. Andy has the Commodity Show every Tuesday and Thursday on TFNN, and so we're doing the show together, kicking off the weekend. It was a great time to do it because when we're talking commodities, Andy's the expert also.
How you doing, Chris?
I'm doing great, thanks, Andy.
Great. I was going to tell you, there's 3 things I love about this market safe product. The first is the exposure that the listeners can get to these metals with absolutely no principal risk. I mean, that's a home run. The second thing is that the minimums are so low, anyone can play. I remember I worked for Solomon Brothers for many years, and in our high net worth, we used to have products like this, but you had to have like a minimum account of 5 or 10 or 20 million bucks to get products like this. And the third thing is the term. The term gives the purchasers of these CDs so much time for the effects of quantitative easing and all these low rates to translate into inflation, which I think is coming down the road. And no matter where gold and silver and platinum go over the next couple of and copper and all of these commodities go over the next couple of months, in the long term, there've been very inflationary pressures that make a product like this golden.
There really is, and one thing real quick, and then I'll get into the current market, but you're exactly right. This is an institutional type of product. I mean, this is one of those products that the institutions are very high net worth customers are accustomed to seeing and to going out there and getting, and we brought it to a $1,500 minimum. We're making it available to the retail clients. So, and not saying that we don't have some very large purchasers of the CD, but certainly we like the idea of bringing that institutional, that fairly complex structure, and bringing it down and trying to make it simple enough and a small enough minimum to reach the retail investor.
It's amazing, Chris, which is really cool when you're just walking us through that. I'm realizing, this is, what Everbank really has done is it's really disruptive technology, I mean, because, right? I mean, you've actually used the internet, and you get the power of all the individual people that, you're making a bigger product, but you're the accumulator of it, and, us as, smaller individuals can take advantage of it.
Absolutely, and then you can also even do it in an IRA, which is a point I think you've brought up in the past, and it's tough to get metals exposure in those IRAs. I mean, you can do it through the purchase of coins, and which can be somewhat expensive to safekeep, and this is a way for clients in their IRA to get exposure to metals and exposure to that asset class with no downside risk. And again, I think it's really a great product for IRAs. And just looking at the markets, you talk about quantitative easing. We've had a lot of calls into the desk about the Greek crisis and about the capital controls that were instituted. We saw a similar type situation when Cyprus, with the situation in Cyprus. So, we've got a lot of people calling and being concerned and actually purchasing the metals from us, actual metals through unallocated accounts. And the real concern is, they want to be able to have something that's going to be liquid and that they're going to be able to spend if and when, a capital control or some other type of event occurs. Well, this product, in that situation, you're going to get more and more people buying into the precious metals, and gold and silver should appreciate in that situation as the safe haven metals. So if and when, this becomes a larger problem, you could see those precious metals react favorably.
It's amazing. It's amazing that, we have fiction, of what people think is going to happen in the future, but now we have fact. And I was just reading the IMF paper that just came across. It came out about 20 minutes ago, and it's amazing. It's saying that flat out that those 11 million people, they need 40 billion euros or $50 billion for the next 3 years, and as of May, at the end of May, there was only 1 billion euros in their banking system. That says quite a bit. I mean, it's like, okay, what I had said a little bit earlier, this week, is that, it's amazing to me that, I think the Greek people are smart and they took their cash out. But if they had that money in gold or silver or in something like this, well, guess what? You still had the money. So the downside risk of keeping it in paper is pretty intense here.
Exactly.
Yeah,
one other thing that's really interesting is that all of these policies designed that we've seen since 2008 are very inflationary, keep rates very low, quantitative easing, artificially low, and this eventually this will come back and result in some inflation. And there's two ways you can there's a few ways you can fight inflation. One of them is these TIPS, the Treasury indexed notes that are set to inflation. But when I compare those to this Everbank product, I'd rather own the market safe metal CD than the TIPS. I think they'll perform much better in an inflationary environment.
Right, and even in the case, we've got copper in there, and as you know, Andy, copper, while it's not a precious metal, is by far probably the largest industrial metal in use, and that's really a play on if and when we get an expansion or a continued expansion of the middle class in China and India.
Yes.
Now, we've seen it
Absolutely.
pull back a little bit, but copper is used in the infrastructure projects and all of the infrastructure spending that's going to be happening in India and China in particular, and even Africa. There's going to be a lot of copper usage out there.
No doubt. Well, listen, Chris, we appreciate you coming on. You have a great 4th of July. Folks, the phone number that you can call is 855-750-4051. Just go to TFNN. What you're going to be asking for is the 5-year Market Safe Power Metals CD. Chris, you have a great one, safe one. Of course, we look forward to speaking to you again.
Happy holiday, Chris.
Thanks, guys.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. Andy and I are going to be coming right back. We'll talk a little bit more about how this 5-year Market Safe Power Metal CD works. Because what is really so cool, folks, you have a 45% capped upside payment. That's within the 5 years. But bottom line, folks, they take the averages each and every year. Andy and I are going to come right back and talk about it. You stay right there, folks. Come right back. Welcome back, folks. Got our man, Mr. Andy Heck. We are talking right now the Market Safe Power Metal CD. And, Andy, it's pretty cool here. So the way this works, folks, okay, is that you have till July 9th to fund this, okay? The minimum is $1,500. And the upside, so what ends up happening is that you can't lose money on it. That's the bottom line. Your upside is capped at 45%. So that's 45% over the course of 5 years. And what's amazing, Andy, is that the last one they did, so what they do, folks, every year, they basically average it out. So it's in a year, the following year, they see what the numbers are. That's the number for that year. The following year, they average it out. That's the number for that year. And the last one that they did, right? And this is wild, folks. Okay. And the last one that they did, which they just paid out about, I think about six or 7 months ago. I don't have the date down pat, but that's, and what it was is that this was a gold and silver one. And the mind blower, of course, is that what had happened, it started in May of, it started in May of 2010, I believe, because I remember when it started.
Mm-hmm.
And so it was May of 2015 when it paid out, I believe. And the mind blower, folks, of course, is that gold, of course, you know, had topped out in September of 2011, but because of the averaging aspect of it, Andy, right, the thing paid out big time.
Exactly. And that's what I love about it. And listen, and you know I'm a bear right now on copper, gold. It doesn't matter. I am still a buyer of this because I think that the moves that we're going to see are going to be sharp spikes to the downside, and they are going to be giant buying opportunities in gold, in silver, in copper. I think that the next bull market is going to be a reaction to the inflation that's built from all these years of QE. So I think we're at the tail end of bear markets, but I think that the tail end is going to be particularly ugly. So I'm a buyer of these CDs.
I know where your head's at. You've explained to me a few times, but guess what? Gold saved itself today, man.
Well, it did. It's also a thin day, and you know what? I'm looking at the chart in gold, and I'm just seeing a lower low. We'll have to see how it all shakes out.
That's what makes a market, man.
That's what makes a market.
That's the beautiful thing, totally.
Absolutely.
So listen, folks, you can also call them at 855-750-4051. And, of course, you can just come over to our website at TFNN.com. Or you can just go to everbank.com/TFNN. You do that, you're going to see it. And just remember, it's the 5-year Market Safe Power Metals CD. Okay, so what else? What else in this beautiful commodity world?
What else in this beautiful commodity world? Well, the grains, man, crazy week in grains. You know, big moves. The USDA came out and said that that acreage planted was less than expected.
Yeah.
You know what? They were so depressed, these grain markets. They need a recovery rally, and they got lots of room on the upside. And if this El Nino comes in, this could be a really interesting sector. I always like to look to the contrarian type of trades, Tom. The other thing I'm looking here is at sugar. You know, El Nino could cause sugar prices to go up. Finally, sugar's been depressed for years and years. You know, in 2011, sugar was 36 cents a pound.
Let me see this thing. I might start trading sugar.
36 cents a pound. It's 12 cents.
I haven't traded sugar for a couple of years. It's more than a couple of years. It's probably 4 or 5 years. Let me see this thing, man. Yeah, look at that. Okay, so we get down to 11.52. You're at 12.30. If you've never traded sugar, folks, sugar's pretty cool. It's, you know, you're only putting up $880, and you get $1,000 a point. It's actually $1,100.
Exactly. It's actually a fun commodity to trade. Now, a little bit wilder is coffee, but I'm starting to like that one too because I think this El Nino could cause at least some fears. Coffee's been ugly lately. I mean, it's under $1.30 a pound.
And
but
coffee,
look at the volatility.
You know,
there.
I remember our man, Mr. Ed Young, God bless him. He was telling me coffee's vicious to trade, right? It's just not. It's just not a trading vehicle, basically. Yeah, right.
Oh, it's vicious.
Yeah.
The only time I like to get into coffee is when it's either too high and extending or too low. And now we're coming into a period here, Tom, where we're close to some real support. It's really low. I mean, $1.27. The demand for coffee continues to go up every day with population increase.
Which makes
all
sense.
About weather.
Yeah, no, that totally makes sense. There's no doubt about it. So talk to me again about this El Nino, how this thing shakes out.
Well, basically,
where is it? Because there's a couple different El Ninos, right?
Right. This is the real El Nino. It starts as a patch of warm water in the Pacific Ocean off the coast of South America.
Okay.
And this warm water, you know, in the atmosphere, you know, warm water, it creates all kinds of, you know, the winds blow across it.
We know it in Florida. Right.
It's up, right. You know, you get
hurricanes,
Right, exactly. But what it does is it changes weather patterns. It some places it creates very cold winters. In some places, very dry. Right now, for example, in Canada, in Russia, and in Europe, you have very dry conditions, like almost drought conditions. But in the U.S., in places like Missouri and other places, you have very wet conditions, too wet. So crops don't grow well when it's too wet or too dry. And El Nino tends to make the weather patterns extreme, either too wet, too dry, torrential rains, big droughts, and that is bad for crop output. So this is the perfect time to start looking at commodities that have extended to the downside.
Right.
Because quite frankly, the downside is limited, and if something happens, the upside, given current price, is explosive.
Right.
Remember what happened to coffee about a year and a half ago? How it was like $1.10 a pound, and then all of a sudden we opened our eyes and it was $2.30 a pound.
Right. Yes.
Right. These are the kinds of things that El Nino can do to these markets. So I'm looking at markets that are extending here.
Which is dynamite. So specifically what he's saying, the markets are already down, folks. And what happens with the commodities, you know, especially food commodities, once you get under the price of production, well, guess what? You know, it can stay there a month, 2 months, but it's not going to stay there longer, and no one's going to plant it. And everyone's going to starve. So
let's look at another one. Let's look at cotton.
Yeah.
Because cotton is starting to show some signs, man. Cotton, a couple of years ago, was $2.27 a pound.
It's 67 cents.
It's 67 cents today.
Holy
all right.
cow.
And I put up a chart here. If you notice, this is a beautiful pattern here. I want your take on this. Since January, cotton has made a series of higher lows and higher highs.
Yeah.
It's a very pretty pattern here.
After what you have here, folks, what I'm looking at, is that, how long a chart is that, Andy? Like the one
that's a weekly. That's a weekly.
Oh, that's even better, man. The base is amazing. Okay, so it broke out of it, and it was in a consolidation at the beginning. Wow, man.
Actually, I'm sorry. That's a daily. Let me go to the weekly.
No, that's all right. Keep that right up there. Just tell me at the left-hand side of that, so is this a 6-month daily?
Yeah, it's more than that. I'm going to go back to the daily. I put up the weekly because I wanted to show how hard it came down. If you see on the weekly, it's ugly. But on the daily, it goes back on the left-hand side. We go back all the way to October 2014.
That's nice. Now it's a 6 months. So what you had there is you had a nice consolidation. It was pushing the swing points with volume, and then basically took it out.
Beautiful. But if I can get the monthly up there, this will blow your mind. This will blow your mind because it'll show you how cheap it is.
You stay right there, folks. Andy and I are going to come right back. Now, the Everbank website, folks, it's everbank.com/TFNN-CD. So everbank.com/TFNN-CD. -CD. Whatever, everbank.com/TFNN-CD. Andy and I come right back.